Well, hello, my currency traders. Joe with you here. It is October 24th. Let's get into a Thursday. You guys know how this routine works. I'm going to share some trades. We're going to take a look at some stuff. Just make sure you take responsibility for all of it. Let's get into the meaningful news of the day. Let's take a look at some stuff technically. And if there's some trades out there, I'll share them as always.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Now, folks, as we move into the market analysis, we kind of had a non-event day. What do I mean by that? Well, let's take a look at it. So U.S. manufacturing and services PMI came out. They were in line. Unemployment and new home sales did show some strength. Less unemployment numbers and new home sales, a slight uptick. This is great. Something that's actually new to me. I've been doing this for over 20 years, folks, and I have rarely seen a quote-unquote soft landing. So the markets are kind of, or at least the U.S. markets are trying to figure out what to do with it. Now, they are very privy to earnings results. And earnings results, I've seen some major shifts in a lot of stocks that have beat or have beat but projected lower or missed and so on and so forth. And you guys can see that if you get in there, you'll see some pretty good moves. I think the lowest move I've seen was about 5.5%. So how they go from there really just depends on the outlook of the investor. Now, what I've seen in the currencies is more of a corrective action. And I loved what Ankit talked about yesterday, because there's a lot of currencies that he was taking a look at saying this looks strong. However, it could pull back. And guess what happened, folks? That's exactly what they did. Look at the yen here, 0.43 to the upside. USD down a little bit, franc down, euro and the pound up about almost exact, as they're pretty much correlated, along with the Aussie and the New Zealand yen just kind of went flat. So the CAD down a little bit. I didn't find anything out there that really showed any sort of divergence versus just a correction. So what you guys saw yesterday and what I'm about to tell you today, it's just a bounce. Whether it's an oversold bounce or a overbought pullback, that's all this is. So we need to focus a little bit more on the longer term instead of just the velocity score by itself. Let's take a look at the SPX, up 0.21. Now understand, we had a big pullback. I actually did the equity recap yesterday. And what I talked about is, we did see a pretty aggressive move to the downside. We had, McDonald's had an E. coli breakout. We had 3M that actually beat some numbers but got beat down. We've got all sorts of earnings. In fact, I think what really helped today was Tesla actually beat, and they were up, 18, 20%, somewhere around there. So it's just been this huge push and pull, but really nothing to go off of. The world index did the same with the SP. Crypto had a huge bounce today. Gold up and then oil down. It's just been this back and forth that has really gained nothing or lost nothing when it comes to the overall trends. It's very difficult to trade. Here's crypto. Based on the volatility of what I've seen when it comes to the Bitcoin Cash, we know that Ethereum's one of the strongest, and so is Litecoin, but all of a sudden they'll flip around on each other. I really think there's a lot of posturing going on when it comes to this, and it could be speculative, which it's a game that I'm priced out of personally. So, hey, there they are again, overall up for the day. So how do we finish? Well, guess what, folks? We had a big day down, but we did have a very strong move back up from yesterday. And let me just kind of reiterate what I talked about yesterday in the equities is this. I like the shadow here. We've seen this before. We've seen big candlesticks. We've seen large candlesticks with decent volume that was a little higher. Boy, those are actually even. Here's one right here. Here's a good size candle with this. And so we're used to seeing these things. And overall, folks, we have actually come out of it, meaning we have continued this trend. We have continued being glass half full. Wow, sorry, folks, that kind of shot really weird there. So I'm not going to doubt it. It's one of these things where, hey, until I'm wrong or proved wrong by the price action, I'm not going to try to speculate because speculation is just emotion and kind of our outlook on how we feel at that point. So let's just follow along with it. We got a nice little bit of a hammer candle going on here, and it is above that rising 20-day moving average, and it is also above this resistance level. So definitely glass half full here. Now, folks, I understand that there are some news events and there's earnings outside of the SPY. So just follow along with the Qs, the diamonds. But until you see something really fall apart or break down, understand that money, or where people put their money, rarely lies. But I am not going to change my outlook, which is why I'm keeping it where we've kept it over the last few sessions. Let's go to our economic news and a couple things that I liked. And I'll be honest, folks, I've been doing this for a long, long time, and it's been, I don't remember a time that I've ever, quote unquote, seen a soft landing. But take a look at this. Unemployment claims a little light. Services and manufacturing PMI in line, or slightly above, slightly below. But that's impressive. And then another round or increase, a slight bump in new home sales. The economy is doing well, and it's kind of cool. It's almost an uncomfortable situation to be in for the U.S. markets because so what do? We put more money into it, or worry about the political outlook or the elections? There's no wrong answer, but we can follow price action. So what do we got left? Not a lot. I'm not looking forward to too much. We've got our retail sales coming out on Friday here for the CAD. I imagine these are going to be probably in line. We already know where they're at, and so I don't think anything's going to change based off of a single number. So you're probably okay to play the longer term trend. And what I mean by that, it's the corrective action. So let's get into the currency analysis. Let's just jump straight into it. First off, folks, I've got the yen. And the yen has been one of the weaker ones. It fell apart, but it has got a bounce. And this is kind of the stuff I'm looking at. Now, I'm not going to go past the velocity score. And the reason being is because, folks, I really want you guys to correlate velocity versus long term, because velocity can change day to day. And velocity is a great indication of, look, this is something that has been weak for a while. We've seen weakness here, some sideways, and then it gets weak. And this is absolutely, right, this last square is a bear rally. Now, if this can roll over and we do get a move to the downside, then the velocity continues in the overall direction of what we've seen in the longer term to the downside. I want to correlate velocity with the overall longer term and pair it against something doing the exact opposite. So patience is important. If we try to score velocity against velocity day to day, it's day trading and it's almost a coin flip. So let's focus on that. Yeah, so a little bit more strength in the yen because it bounced. Let's take a look at the US dollar. US dollar is kind of doing the same thing. It pulled back, but it's consolidating. We know that it has been on a little bit more of a move to the upside as of late, but look at the velocity. Looks like a bull pullback that's bounced. It looks like it's moving higher here. So I'm just going to keep it where it's at. Now, if it continues up, that's great. Let's pair it against something weak. Overthinking it is where we get in trouble. Let's take a look at the franc. Here's the franc. We had this showing, some signs of a little bit of a bounce off of the bottom, but it's in a consolidation period. Look at this. Flip the SAR, pulled back. We do have a move up in the ATR, but we're flat on the RSI. So we know this is just, it's going to get to a point where it's going to either pull back deeper or consolidate. Now, if we compare that on the daily, the overall strength, you can see that it is still indecisive. It can come back into this range. And this is the stuff that I want to take into consideration. Is the franc really something to pair strong against another weak currency, or something weak against another strong currency? And look at this box, folks. The answer is no. It's just bouncing around in a range. So it's not really going to help us when it comes to longer term. Let's move on to the euro. The euro and the pound both put in about the same percentage today, and that's fine. Here's the velocity. Let's go to the velocities first, folks. There it is. The velocity looks really good on this, right? Showing a little bit of a flip here on the SAR. It broke out of resistance. I like the RSI, and this is great. Is this a +3? Is this a +3? Absolutely, it's a +3 on the velocity score, right? Big push here, flip on the SAR, breaking out, good moving average. But let's take a look at it on the daily chart. And guess what, folks? It's doing basically what the franc is. And I've seen a lot of this. And this is not only what I'm seeing in currencies, but what I'm seeing in the equities as well. A lot of consolidation. Stocks that are stronger continue to kind of float higher. Weaker stocks float lower. There's not a lot of opportunity where it becomes, hey, you know what, I'm going to just catch lightning in a bottle. They're just revising to its mean. So not a lot to go off of. Yes, you'll see on the velocity score here, folks, when I show you the slide, it's changed quite a bit, but does it give us opportunity? No, absolutely not. Here's the pound. Pound looks good here. Let's get back to velocity score. I do like this area. It flipped the SAR. Well, it had for a while a shallow pullback. The moving average is flat. I'd like to see something a little bit higher here to break out, but flat here. So, you know, it's zero as it was yesterday. But let's take a look at the daily on this, and you'll see that the overall move does have opportunity if it can break above an ascending triangle pattern. I like the longer term on this. Here's the catch, and this is something you don't find in equities. You find this in currencies. Is it has to be paired against something going weaker. Equities are easy. The stock is either strong or it's weak. People want to buy it or sell it. This is poised for a nice move to the upside if we can find something weak to pair it against. But right now, it's not doing it. It's just corrective action. Next up, folks, let's take a look at the CAD. Let me jump over the velocity score, zoom in on this, and it's in a pullback. A pullback after previous day. Let's see, this is the 23rd here, right about. Here's where it ended. So a nice move to the upside, up here, flat there. So this was a +2, right? Maybe a +1, +2. But guess what? Rolls over, flips the SARs, turns this, which is 0, drops in the RSI. This goes from a +1 to +2 to a -1. Is it a -1? No, it's a pullback. So let's take a look at it against itself. Daily chart. And hey, lo and behold, it is absolutely sideways. Sideways, flip, 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 sideways. What do you do against this? What do you do with the CAD? Nothing. It's not outperforming anything. So the revision movement has been very difficult for currencies as of late when it comes to trying to pair something strong and weak against each other. Here is the Aussie as I try to get back to the chart here. Here's the Aussie, one of the strongest that we've seen in a while. And guess what, folks? It just velocity itself into a -1, -0, and 0, -1. So -1, -2. And is it because it's fallen apart and it's the weakest currency you've ever seen? No, it's corrective action. Corrective action is a very difficult thing to trade. So let's zoom out to its daily chart, and you'll see that it's more of a consolidation area to where it could flip around at this area. Now, once again, this is descending, so it could break down a little bit. We could see a little bit more weakness in the Aussie, or it could, for you guys who are avid chart traders, let me go ahead and build this. It's referred to as a bullish flag pattern. Comes down to this point and breaks up to its next level. It's called a bullish flag pattern if you're a longer term. However, the point I'm trying to make, folks, is it's not falling apart. It's not super weak, but it is correcting. Very difficult to trade when you have corrective action. Here's the Kiwi. I'm going to go back to the velocity score first. Here it is. I moved this down to a -2 because of obvious reasons. Sideways to down here below the 50, but 0. So 0 here, -1, and maybe -2. I'll call it -2. You can call it a -1, doesn't matter. But the overall idea is it's just pulling back. Let's take a look at the daily one more time. I really am trying to force this folks down your throat. So overall, it's doing the same thing that the Aussie is. It's showing some sort of a consolidation pattern. It might be a descending triangle pattern if you believe it's going to get weaker. So if this continues to show weakness, this might get a little bit weaker than what we've seen as of late. It is got an RSI below that 50 level. So this looks to me like a little weaker than the Aussie, even though I used to correlate the two of them together. But something we could take a look at moving forward, but not a lot to go off today. So that's basically what I got, folks. A lot of movement back and forth that have done nothing. I love the fact that Onkit really talked about this yesterday, projecting that, hey, you know, the CAD might move to here, or the pound, it stayed here, but the euro bounced up. The dollar was here, it moved down. It's corrective action. And that we need to treat it as such. There's no opportunities to make trades based on velocity score day to day to day. In fact, it's very difficult to do. What we do need to do is we need to identify a velocity divergence and then correlate it with something longer term. And the longer that one stays +3 against a -3 will give us the opportunity to actually make a trade up or down. Right now, if you take a look at what Ankit said yesterday versus what I have, it's just a flip-flop. It's a pullback. It's a corrective action. There's really nothing out there. So, folks, honestly, I have no possible trades to add. In fact, I'm going to try to add something saying that, look, if you can't find a trade, it's because you're trying to make something up. So if it's not something that you can take from one day to the next, let's leave it alone. Corrective move in the currencies today. Focus on the longer term trends for opportunities. Now, folks, if you guys did get into some trades over yesterday or the day before, and you have a wide enough stop, you are probably still in them if you can survive the corrective action. For me to say, hey, what was strong is now weak and what was weak is now strong, so go ahead and do exactly opposite of what we told you to do yesterday, doesn't make any sense. But if you have enough space or room to continue on with the trades that you've made, let's say Monday or Tuesday, you're probably doing okay. And once again, a little corrective action today. Don't let that scare you out of your position, but trust in the fact of your overall top-down approach that it could probably turn around and by the end of this week, work out for you. Focus on the longer-term trends for opportunities, not so much the velocity score. The velocity score is going to let you know when to get in or what might be a good opportunity when it comes to retracement or breakouts, but it is not going to make you money right now, and it's been a very difficult market because of that. I'm going to lean towards the equity side, folks. It's because of earnings. I'm seeing a lot of money not coming out of the markets, but coming out of some high flyers and going into some other ones, or good earnings going into bad earnings going into good earnings. It's a different type of market, folks, because we're actually getting a soft landing in the equities, and there's a lot of confidence behind it. It is seriously a sentiment that is bullish, that is putting money in better opportunities, and which is creating a lot of corrective moves, which we could actually correlate. So keep on the strong currencies versus the weak currencies in the longer term, and you will find more opportunities. Play relative strength and weakness as always, and that's the best way I can see as of right now how to do it personally. So proper position sizing as always, folks. If you're uncomfortable, you do not have to make a trade. Thank you for joining me. We'll talk to you guys next time. Bye, folks.